Hi, welcome to Charts Chatter with Chatur Charts. In today's edition, that is the 18th May edition, we're going to talk about primarily the indices and also try to dig deeper as to why are indices so volatile. So let's first understand as to what happened today. So this is the day chart of Nifty, and as you can see, after yesterday's stellar 417-point rally, Nifty broke out of the trend line and attempted a new high at 16,400. And no sooner that it exactly touched this resistance line, the red resistance line that you see here, it sold off, and it even broke the previous resistance which it had crossed at 16,269.70 zones, and came back to rest again on the trend line. So the pattern that got formed is an evening star, and generally an evening star on a day chart spells a little bit of trouble for the index, and which clearly spells out inability to go to higher levels. So Nifty did not succeed in its attempt to move out. Pretty similar was the case with Bank Nifty also. So let's examine Bank Nifty. It looks an identical chart, broke out of the channel, tested 34,600, and then broke the previous support at 34,280, and actually dipped inside the channel. So a little bit more weaker than even Nifty. And so this is also an evening star pattern, which is a very weak pattern. So let's understand. So as you can see, Nifty moved out of the trend line resistance to test 16,400 and sold off to close flat with a negative bias, losing 19 points. It looks pretty flat. Um, in the to sum it up, it looks like it lost only 19 points, but one must understand that it has actually intraday given up about 160 odd points. On the daily charts, it has formed an evening star, thus signifying inability to move up further. So I'm personally expecting Nifty to correct and retest lower levels and consolidate. So since 16,250 has been broken, Nifty will probably move down to test 16,162, which it had crossed earlier. And if that breaks, probably 16,083. And then if even that breaks, probably it will retest 15,935 from where it had actually galloped to about 400 plus points. 2 weeks back or 3 weeks back, Nifty's trading range was about 16,800 to 17,400. In fact, for 4 long months since January, Nifty's trading range was 16,800 to 17,400. But now, with the Nifty correcting, the revised trading range, in my opinion, perhaps is about 15,800 to 16,400. So until the situation completely improves, Nifty probably will trade in this range. It might test a low of 15,800, jump and again take support and move to 16,400 levels. Similar to Nifty, Bank Nifty has also attempted to move out of the trendline resistance, but failed to hold new level at 34,600. And it has closed with a negative bias, losing 138 points. But here again, we must understand that intraday it has almost lost about 450 odd points. Supports are now at 34,200, followed by 34,000 and 33,800. So the revised trading range for Bank Nifty appears to be actually 33,800 to about 34,600. And if 33,800 is broken, perhaps a revisit of 33,500 is also possible. Why are markets so volatile? We have seen that in case of falling trend lines, falling channels, the index makes an attempt to move up, again fails, corrects, and again makes a lower low. So that is the unique feature of a falling channel. So for a bull case, if one has to make a bull case for the current market, then we must understand what are those factors that may propel the indices to a higher level. So high GST collection, good quarterly results of most companies, high direct tax collection, conducive business environment, stable government at the center, and markets already corrected and at a significant bottom are some of the points for a bull case scenario. So every month, the mutual fund collections is also about 23,000 crores. And the money that FIIs take away and FPIs pull out gets compensated by DII buying and mutual fund buying as well. So that's why markets have been kind of propping up. But you see that it has corrected from 18,400 to 15,800. So it's more than a 2,500 point correction. Now, on the contrary, the volatility, the push and pull in the markets is a function of a bull case and a bear case. So we see high dollar index, high bond yields are completely throwing equities out of sync. Crude at US dollars, 112 per barrel. The Fed rate hike in coming months. Fed already raised rates last month. And in the next bi-monthly meeting, another hike is planned. The rate hike by RBI, the surprise rate hike by RBI of 40 basis points last week. And then another news flow that in the June meeting also, they're going to kind of consider a rate hike revision. The geopolitical situation, the Russia-Ukraine war, the rising cost of raw materials and supply chain issues, etc. They're all keeping markets are subdued and they're correcting. So I think until we get clear news flow, this market needs some really strong news flow, positive news flow to kind of make new highs, and or it will need some news flow to take it down. So until these things happen, markets are bound to be volatile. One might see 300, 400 point swing highs made, and suddenly the entire high is being given up. So I think this push and pull will continue for some more time until the global factors ease out and makes equities more attractive as a investment destination. So I thought in today's session we must try to get a little more deeper to understand why are markets so volatile. So let's see what is the outcome tomorrow after the evening start that we saw today. Probably some markets might give up the gains that it has made over the last yesterday's session, and might correct and again retest lower levels is what I think. So let's wait and watch what happens. I hope this educational video was useful. And if you do like this video, please press the like button and also subscribe to the channel for continuous updates. And, I'll try to scoop up more such informative, items and share that with you. Thank you very much and have a nice evening.